Hello and welcome to Q&A with Billy Bray. I'm here with Billy Bray and we're going to be asking him a few questions that he commonly gets in his insurance brokerage. So Billy, how are you doing today?
I'm good, Andrew. Thank you very much. Glad to be doing this with you. This is the first inaugural Q&A with Billy Bray. So looking forward to hopefully reaching a lot of people and helping them out.
Yes, sir, it is. Well, I can't help but ask, what is that little pin that you have on your corner of your chest right there?
Well, thank you. This is my volunteer pin for the Leukemia and Lymphoma Society Man of the Year campaign that I've been nominated to be part of, and we're raising money for. And so we've got wristbands, all kinds of swag, and we've got 16 or 17 people, handful of companies that have already donated, and we're chipping away at our goal. So if anybody's interested, we'll put a link below. You can learn more, and there's sponsorship opportunities and donor opportunities too. So it's a really wonderful cause.
Awesome. That's really good to hear. I'm glad that you gave that shout out at the beginning here so people can get a notice of just how it's like to, support a cause. So anyways, I just wanted to hop right in. So the first question that a lot of people have been commonly asking is, what types of insurance coverage do you specialize in?
Okay, great. Yeah, I mean, look, I've done a lot of different types of insurance. So anything from personal insurance to health insurance and stuff like that. Like I know that, and I'm licensed in. That was almost 20 years ago. Right here, right now, we do commercial insurance. So our brokerage only does commercial insurance. And people say, well, what's commercial insurance? Well, it's kind of a grouping of different types of policies, which could be workers' comp. It could be property insurance, which includes fire, wind, hail. All the different types of liability insurances, whether it's just your basic general liability, your umbrella liability. A lot of people are asking about cyber liability, employment practices liability, D&O, E&O. I mean, there's about 20 different types of liability, maybe more. Flood insurance, which a lot of people have questions and concerns with, especially as we lead in here to hurricane season coming up in June. And there's various other policies and tactics that we use in structuring these policies as well. So for instance, you can go buy a general liability policy off the shelf from basically anywhere through like the Hartford, right? Through any broker. And it's just kind of cookie cutter, easy, doesn't take a lot of skill. And there's not a lot of sophistication on the buyer side and also on the seller side. So what we like to do is help people get a little bit more tactical, a little bit more strategic with how they buy it strategically. And so we do things like master portfolio programs. We'll help private equity companies roll up their portfolios together. We'll do upfront due diligence when somebody's going to buy a company. We'll do back end diligence when you're going to exit or divest of your company. There's a lot of strategy involved in those areas. We also have a specialization in captive insurance, which is hyper complicated, and we'll maybe have to do a full podcast or 2 or 3 just on that subject because there's so many dimensions to it. But when it comes down to it, we don't do it all. We don't want to do it all. We specialize in high risk, hard to place, complicated commercial insurance matters.
Awesome. That's a perfect way to answer that question for me. I really appreciate that. So how often do you review policies to ensure they're meeting my changing needs? That's a big question that people have been recently asking me.
Yeah. So with our clientele, it's at least once a year. Sometimes it's quarterly. Sometimes it's even more often than that. It depends on if they're buying companies, selling companies, what's going on with their overall risk profile. In our business, in my agency, we always do a hard, strict review, at least annually. The policies last for a year, so there's not a lot of like, why would you do it midterm unless you're talking to the client and their business is changing? Then that would make all the sense. In terms of for prospective clients, that's our business. As we grow, and we've grown in some of the awards you see behind me, fastest growing insurance agency or top 5 new agencies in the nation in 2022, just through hyper growth and things like that. Clients are coming to us to do business with us because our review process we're very proud of it and the clients like it. So it's kind of cool. We've got a little secret sauce in there, which I'm not going to reveal. But if anybody's interested, we can certainly get that information or maybe even do a one-on-one consultation. But look, if your CFO or you, the owner, or the CEO, controller, or your risk manager, if you've got a risk manager, they should be doing this sufficiently. But if you don't, then like who's doing that for you? And so I named the company Outsourced Risk Managers. And this is a funny story. The reason I named the company Outsourced Risk Managers is because I learned the outsourced model from this human resources company, where they said, look, if you're not big enough to have a full-time HR staff of like 3+ people, you can come to us and we'll do all of that for you. And we just work on a project basis, retainer basis, whatever the case may be, kind of like part-time and as needed. So I said, that's a really cool model. There's a huge need in the middle market, upper middle market, not as much, but some middle market, certainly lower middle market. So why don't we just become clients' outsourced risk managers, help them buy their insurance like a regular basic broker, John Smith's insurance agency at the corner, but then add a whole bunch of cool stuff to it to give them a better buying experience and a better service experience. So that's kind of how we've modeled this. If your broker or your in-house person that handles the insurance is not reviewing your policies at least once a year, that's a problem. You're probably overpaying. You probably have things in the coverage that maybe you thought you had, you didn't have, or you do have, but you didn't think you had. Especially when it comes to like deductibles, exclusions, limitations, sublimits, things like that.
Awesome. That's really good to hear. That's really great news. So, can you help could you share a specific example of how you helped a client identify gaps in their coverage and how you found that solution?
Yeah, I mean, it's almost every time. So that might be hard to believe from some people, but the interesting thing is like I always say this kind of joking, but also very, very seriously. People typically have an insurance problem, whether they know it or not. So a lot of people know that they do because their costs are going up, or like they couldn't buy as much coverage as they used to because it's too expensive. So then maybe they're consciously aware of that. But some people aren't consciously aware of if you have an assault and battery exclusion for your shopping center that's only going to cover you for $25,000 if there's a fist fight in the front of your property. Things like that. If there's I mean, look, your question is every time. We've probably done this 80 times or 90 times where somebody's with Marsh or Gallagher or Aon or Higginbotham or these guys that, they're contenders. But we come in and we read these policies and we give the client something different that they have not seen or felt or experienced before. They're like, my goodness. Why wouldn't I work with you guys? It's completely different. And we try to give a complete different experience to our clients than our most fierce competitors. And they like that. And they get a full service model. Instead of being promised a lot of services, they actually get those services.
Well, that's really good. So you were saying that these happen all the time. Is there ever been an incident where something goes completely sideways and they come to you and you find a huge problem in their insurance?
One of my best friends, Luis Chavez, he runs Pangea Financial Group, and Corey Walton, he runs the Miami office. Luis is here in Houston. The reason he found me and the way that we started doing business together was after Hurricane Harvey in 2018. One of his clients was, I won't say their name. They're not around anymore, but it doesn't really matter. There's a bunch of these groups, so it's not just one. The duty-free shops in the international airports where they have, they sell all the duty-free stuff. And well, they got shut down for, I forget, this was over 5 years ago. They got shut down for 2 weeks or 3 weeks or a month or something like that. And they're operating on very thin margins because these airports actually take most of the profit. A lot of people don't know that. And so they're operating on thin margins. They have a lot of theft. And then, oh my gosh, all of my customers don't show up for like 3 weeks in a row because the airport shut down because nobody's traveling, the whole city's flooded, and like people have their hair on fire because their houses are needing attendance. And so they can't go do that business travel. They're not going to go on that vacation. They need to focus on home. And this was a $550,000 loss of income claim that they got zero for. This is an international buyer, not used to insurance in the US. They thought they did the right thing, and I would argue they didn't do anything wrong. They got the insurance from what I call just your Main Street broker or one of the wannabes, and they didn't explain to them, didn't try to sell them, didn't try to help them understand all of their risks or their entire risk profile, and they had a loss of income claim. They also had theft claims that went unpaid because it was structured improperly, but that's a little bit of a side note. But like the big nasty claim, yeah, $550,000 unpaid claim, Hurricane Harvey. 2 years later, that company is out of business, like zero. All their 70 plus employees had to go find other jobs. That business was ruined. I won't say fully in part to that claim, but they might have been able to hang on a little bit longer if they didn't have that negative of an impact. So how many things do you have to sell to make $550,000 worth of profit after taxes and after all that? That is a tremendous amount. So that was kind of a big nasty one, and there's plenty of others.
Yeah, well,
So let me round that out. So Luis Chavez does their health insurance. Let me just finish the story. Contacts me. I don't know how he found me, probably LinkedIn, which a lot of y'all are contacting me. Thank you. And he said, look, I've got a problem. Can you help me? So long story, a very long story made a little bit shorter. We were able to go into that client. We were able to help them. Now, we couldn't help them recoup those claims dollars because the policy was very black and white of what it would and wouldn't do. But we went in, we did a risk assessment, we read their policies. We said, look, you've got this problem. Then we discovered the retail theft problem. So we covered those two gaps. Yes, they paid more money, but they had less risk. And they knew, oh my gosh, a $550,000 unpaid claim hits me a lot harder than paying a little bit more for some quality insurance. And I think we just fixed those two problems, but they were major ones. And so the profits were leaking out of the business because the retail theft, and then boom, that one big one. And they hired us. And fast forward, Luis's family and my family are extremely close, and we have a great business relationship. And that client was taken care of, but I'm afraid it was a little bit too late.
understood. So to flip a negative story into the positive ones, have you ever had a success story, or could you share me a success story where you helped out a client who either recovered quickly, other than the one that you have shown, or one where someone was about to go into total disaster and you kind of came in and saved the day?
Yeah. I always say, look, you're 2 bad renewals away from going out of business. And that could be because of a claim. It could be because of natural disasters. It could be something completely out of your reach and out of your element. I will tell you, we had a recent scenario where these guys were going to have to liquidate their entire property portfolio. And we came to the table with a creative solution and saved them millions upon millions of dollars on their insurance premiums, got them quality coverage, quality attention, and service that they were not getting, where I'm not going to say the dollar amount that was raised, but significant, not $1 billion, but it was up there. And when you're a group of investors raising money, you could potentially be liable personally if you really screw something up bad. And so I would argue not only their employees, not only the people that occupied those businesses, but possibly the families could be at risk there. They just got hit with a really bad renewal, and when they were blindsided, they got bad advice. There was a lack of advice from the broker, and this client didn't do anything wrong. They're running their business. They're doing what they know how to do. The majority of times we see people don't necessarily do something wrong, or they do it wrong on purpose. They just either got bad advice, no advice, or they didn't know what to do. And we come in and say, well, you didn't know about this, you didn't know about that. You know, I have attorneys and CPAs and home builders, and people tell me that all the time. They're like, our customers just didn't know that this thing existed, but now that they do their process a little bit differently. So to answer your question, yeah, these guys were about to have professional, personal, huge financial problems. We came in, restructured the portfolio on a insurance basis, which helped their costs, which helped them be able to hold on to some assets and cash flow them properly and have the proper insurance that the banks require, and so on and so forth. And unfortunately, that's not the only story that we have like that. But yeah.
Well, I'm glad you were able to get someone some better insurance out of a story like that.
Yeah.
Another question is, so you're based out of Houston, Texas, which when you guys get hurricanes, they are nasty in the Houston area, as well as across the whole East Coast. But do you have any specific other examples of other natural disasters, whether earthquakes or anything else, tornadoes that you've had to deal with a client where they had to file a huge claim?
Yeah, there was one client in Sugar Land, and they were manufacturing oil field tools. I really like this client. I worked really hard to get them. I probably went after it for like 3 years, brought in all the resources to try to win them from a very large broker that was sophisticated. They had their international program, and we were trying to carve Houston off of that international program so they could buy it locally. There was there was a what I call, I think the weathermen call it a pop down tornado, where it just comes out of the sky, it goes down, maybe it moves around a little bit and then goes back up, but it doesn't just come sweeping through like the wild stuff you see sometimes on the Weather Channel. So it came down, it lifted the roof of this business up, a big, humongous metal building, lifted it up, rainwater got in and damaged a whole bunch of their contents, inventory, just ruined a whole bunch of the internal components of the business. That roof sat back down at some point. So when the insurance adjuster comes out and says, you didn't have weather damage, this is like a leaky pipe or something. No, it was weather damage. And so we had to fight like how the weather damage occurred, what happened, why. And so we had to fight that fight. So this client, I forget how big their claim was. It was 6 figures, not 7, but it was significant. And they ended up winning the claim argument, but the claims adjuster wanted to fight with the client. Claims adjuster wanted to fight with me, saying that this wasn't what happened. Yeah, pop down tornado lifted the roof up, water got in, caused financial harm to the business. If the roof sat down at some point, I don't know the exact occurrence. Maybe it lifted it up a few times, and it was just going like this. There was no camera to show that part of the property. They were all faced down into the parking lot, right? So they got their claims money, and they were able to recoup their losses, minus their deductible, of course, for that particular claim. But that could have been bad. That was a new business, just set up shop in Houston, and having that several $100,000 negative hit would have really hurt them.
Yeah, well, it's a good thing you were able to help them out there as well, because these stories, no one really knows what could happen. We're not guaranteed tomorrow with the weather. And so the weatherman I know can do their best thing, they can do whatever. But so when something like this happens, I know that outsourced risk managers, if I'm correct me if I'm wrong, but you guys are more than just a brokerage. There's quite a few other things that you guys do. So what specifically do you guys do? Do you help with like emotional help? Do you help with physical help? What other things do you guys do as a brokerage?
Well, some of my clients do call me quite emotional, and so we can console them. But in all seriousness, look, we're a full service client advocate. So whatever that means, and whatever the client needs, that comes down to like the cookie cutter brokerage. We place your insurance policies, we shop them for you, we get you the best deal in the market, and we answer your phone call when you call us. If that's all you're getting from your broker, call us, because that's very, very basic and what I would consider really just junior varsity service. Look, there's so many more things out there: loss control, claims management, conversations around specifics with human resources, with hiring and firing practices, with onboarding practices, with Department of Transportation, safeties and protocols. There's a lot of different things we can do from a strategic and tactical perspective on overall risk management. So we have those conversations through the year for different reasons: when it's going to freeze, when it's going to be hurricane season, when flood season comes up, when different things about your building or your structure or your employees, or when to buy what, how to buy what, different policies, different coverages, when to pare back down. Like, look, we're not insurance salesmen. Yeah, we sell insurance. We typically absorb a program from a competing broker and fix it. We go in and we make it perfect. What we find a lot of times is that bunch of policies are bought, then they're renewed and renewed and renewed and renewed. And 5 years later, it's like, hey, my business is way different than it was 5 years ago. Why do I still have this? Or why am I not being talked about this? And so those strategic conversations, look, we're entrepreneurs. So we understand, like, you shouldn't be insurance rich or poor. You should find that happy medium. Of outsourced risk managers always says, look, what's the worst case scenario? What's the best case scenario? Figure out where your risk tolerance is. Let's land somewhere in the middle. prepare for the downside, and then be ready for the upside. So we don't want you to spend any more than you need to protect your business the way that you want it to be protected in a very customized approach. Now, we've got a ton of resources, people, computer programs, various things. We can do wind modeling, we can do fire modeling. Like if you have a spread of portfolio risk, what's the likelihood that you're going to have claim at more than one location, or that affects more than one property, or that affects more than one building on one single parcel? And we can run all that modeling for you. That's easy. We don't even charge for that. A lot of these services we don't charge for. Some of them we have to because, like captive insurance diligence takes a lot of time and energy. And so that's a handful. I mean, I'm just kind of spitfiring from the side of my hip, but when it comes down to it, if you're buying insurance of any significance at all, you need kind of an ass kicker, somebody that's going to get in there and have passion and drive about what they do to help you. But really in terms of, look, if this was my business, this is what I would do. But knowing, your personality and your risk profile and a little bit more about your goals and, financial picture. If you're flush with cash and you're exiting your business, that's one thing. If you're a brand new startup and you have no free cash flow, that's another thing. So we get in there and we work a strategy for that particular. It's custom insurance solutions.
Got you. So speaking of custom, a big word that scares people / brings people in is the word captives. So can you just elaborate a little more on what captive insurance is to maybe someone that's not as aware?
I'm going to give you a very high level, surface level, no detail answer.
Okay.
We'll do the details later. If you're a sophisticated buyer spending significant amount of money on insurance premium with access to capital, and you've had bad renewals, huge increases in renewals, or you're just really frustrated with the insurance companies with either a claim scenario or a premium scenario or both, and you want to take the matters into your own hands and build your own insurance company and pay yourself premiums, also pay your own claims. There's the risky side. You've got to capitalize it up. You can do that on a small scale or a large scale. So we've got some clients in the captive space that just have $100,000 deductible, but their captive funds that $100,000 deductible. And then there's the big boys that have, 8 and 9 figure deductibles that pretty much probably wouldn't ever hit their real insurance. It's all going to be in their captive. So let's dive into that later in more detail on a different podcast. But it is a sophisticated approach. I call it kind of top of the food chain, but a lot of folks don't want to do it. They don't qualify for it, but it's a conversation you need to have. The best indicator is if you're spending $300,000 a year in all your insurance policies or so, talk to somebody about it. Now, it's kind of like the residential versus commercial, brokers, or, you could say CPAs or whatever profession. It's way different. So the person that's selling you your homeowner's insurance, talking to you about captive insurance, I would be very skeptical about. There's only a few elite firms with a few elite people that know those, and the attorneys, the actuaries, and the team that can be lined up to actually perform those services. So go to LinkedIn and find one. You're talking to one right now, but I don't want to make this a sales commercial.
Fair enough. I understand. So another question that's a little more recent, and God forbid the tragedy that happened at the Francis Scott Key Bridge, but what are certain things that an insurance brokerage would have to do in order to go through a claims process that is of that size?
Yeah, so that's going to be a municipality, really a state and a federal government agency scenario. We don't work in the public sector. I used to. We insured some humongous schools in like Port Arthur, Beaumont area, Galveston area. Back in a past life, I realized I didn't like that work. It was way too political. It wasn't relationship driven, and so we got out of that business before I started Outsourced. In terms of the management of that, you're going to have you're going to have more than just insurance. So that's going to be more of like a municipal and government bond situation. The federal government's going to come in and fund a bunch of it. Apparently, that's a little bit out of my wheelhouse. So
Okay.
I don't know, but I'll take you to a smaller scale. Say, for instance, this happens a lot actually. Say, for instance, a big truck runs into the side of your building. Okay, so it's bad, but it's on a much smaller scale, but similar. Okay, so say you're the building owner. Well, you're going to file a claim against the person that ran into your building because it's going to be their auto insurance more than likely. Hopefully, not anything more than that, like an umbrella. If you're the person driving the truck or the owner of that trucking company, you're going to need to file a claim against your own insurance to make that property owner whole. And hopefully there wasn't bodily injury involved. But usually it's just somebody running into the outside of the building, or sometimes a telephone pole in the parking lot, or a sign, or something stupid, or the guy just can't quite make that turn and he runs over something small. Those are typically small claims, and sometimes you can pay those out of pocket. You don't always have to file an insurance claim for that.
Okay, perfect. Yeah, because that was going to be my next question was, what is a smaller scale version of that? And also, yeah, would you have to file a claim for such an occasion? I think a
Not
lot of
always.
people, yeah, and a lot of people I think sometimes think that these big time things like the Francis Scott Key Bridge are like 100% all insurance, and they need to realize that on a scale like that, that we're talking on a, yeah, of course, we're talking a world scale because this, I believe, correct me if I'm wrong, or someone else correct me if I'm wrong on the internet. That was a Saudi Arabia or Middle Eastern ship that had hit an American bridge. So you're going to be talking about other countries getting involved, and I don't think people understand that. Yeah, like an insurance brokerage like us would be more of a local car hits the side of a building situation.
Yeah, or just something on a non-government scale. So we work with middle market businesses, okay? Companies that are not necessarily the Fortune 100, the Fortune 1000. We don't like that business. We don't want to mess with that business for a lot of reasons. Your small business, if you're a friend, family member, or a referral from one, yeah, we'll knock that down all day. Make sure you're taken care of. Absolutely, 100%. But what we target are the companies that are spending 6 and 7 figures on their insurance premiums. Whatever their risk profile would be, we like the high risk ones, but even low risk companies that are spending 200 or 300 grand on their insurance premiums, they still need great advice.
Yeah, totally. And I understand that. So you are like the middleman of the middleman.
We are the client advocate that helps the client not get in a bind with the big insurance companies.
Yes, sir. I understand that. So, one last question for you. I don't want to take too much of your time. Would be, what would you, how would you explain flood insurance versus water damage? I've gotten this question quite a few times. People, I know you've made a few videos. I've looked at your LinkedIn. Um, but some people still don't understand the difference between flood insurance with rising water and a bursted pipe.
Yeah, great question. This is very popular. And, I was talking to a client just the other day, and she has her her general liability, and her property insurance coming up. And I said, well, this one's a little different because you got this, and then this one's a little different because you got that. And she said, I don't even know what you're talking about. Just lump it all together and tell me what I need to do. And this is somebody that knows how to buy insurance. They're sophisticated. They were just distracted probably with taxes or something else right now that maybe is a little bit more pressing, and their brain space just didn't want to go into an analytical mode on something else. So the question is, what's the difference between flood insurance and water damage? I mean, technically, flood insurance is water damage, but here's where people get confused. Well, it's water, so it's water. Well, true, but rising water is flood. Water that's not rising would be typically what's considered water damage within an insurance policy. So if water comes in from the wall or from the ceiling from a bursted pipe, it might even cause what you think is a flood. So people get confused with that too. Well, I had like 2 feet of water in my place, but it's from this other pipe, where all these pipes were bursting, and then no, it's not where it started though. That was not rising water. It was water that eventually rose, but it was coming from the top down or the side in. So typically, like, flood water would be a lot of rain, tsunami, It would be rising tide. Like if you think at the beach, how the tide goes up and goes down. Well, when it goes up, if it goes up too far and it gets to your business, that would be one thing. They call it storm surge. We don't really have too many tsunamis here in the U.S., thank goodness, knock on wood. But storm surge is a real thing, especially Texas, Louisiana, Florida, the Carolinas where you're at. There's a lot of confusion around that topic. So if you have a pipe burst in your business, water damage, typically. Sometimes there's limitations and exclusions for that. That's why I say typically, but flood insurance is a complete different policy too. So flood typically stands on its own unless you have a big master program or you've got a very jumbo property policy that includes flood insurance. So for most of y'all, the flood insurance stands on its own. It's separate. Within your property insurance, you would typically have the water damage, whether it's an endorsement or an exclusion or a sublimit or just part of the policy. So that would be something to hone in on because look, we've had what some people call a snowvid, or when the entire U.S. froze except for South Florida, and people's pipes burst all over the place. I mean, look, it happened to me. My townhouse at the time, wife and I were in South Florida. We were fine, but my townhouse is sitting here spitting water out of the garage, and so that was bad. It can happen to anybody, but you want to know what your coverage is before you go into those type of seasons. So ask your insurance broker for a review, read your policies, understand what they say. And if you don't feel like doing that, send them to us. We'll do it for you.
Sounds good, Billy. So I appreciate your time today. And I just wanted to ask you any last things. Do you have any shout outs or anybody you'd like to talk to or business you may be working with? Or is there anything you want to shout out right now? Go ahead.
I want to shout out to the Leukemia and Lymphoma Society, the Man of the Year, Woman of the Year, Visionary of the Year campaign. Check them out. It's a great cause. I give a shout out to the Downtown Rotary Club of Houston, which is the best local charity, in my opinion, here in the Houston area, and it is national and international as well. So that's a couple of the charitable shout outs, and maybe I'll have more later, Andrew. And thank you for your time. I'll shout out to you, my friend.
No problem. Thank you so much, Billy. Have a great rest of your day.
Same.